Walmart stock investors got some huge news as the company's management team gave detailed insights into the categories that are outperforming inside the company. I'll talk about what that means for Walmart stock investors in this video here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the management team said that they're delivering value and convenience to their customers. And Walmart's always been delivering value and convenience to their customers, except for a brief moment in the 2010s when Walmart was resistant to focus on its online business, on its e-commerce business. During that time, they were stubbornly trying to retain the customer in store because those are more lucrative transactions for the company. The company felt more confident in its competitive advantage there, and therefore it kind of lacked that convenience that customers had gone to Walmart for. Now, companies like Amazon were delivering more convenience by delivering items to the doorstep, having so much selection online, so much convenience. But in the last 5 years, Walmart has done a great job of making up for what they lacked in the early 2010s and really driving growth in the online category. And the online category is the high growing category for the business. It's driving progress in those areas like advertising, membership, and marketplace services. And these are also higher margin businesses than brick and mortar transactions like buying a bottle of water or a 12 pack of Pepsi Cola. So that's been working very well for the company, and their April results were better than they had expected, especially inside Walmart US, right? We, and myself included, was expecting a slowdown for Walmart US because of the higher tariffs and the decline in personal disposable income that the consumer was feeling. And so I was a little bit concerned about Walmart US sales, but it turned out better than expected. Sales across segments improved as the quarter progressed, including strong Easter seasonal events. So not only was the quarter better than expected for Walmart, but things were getting better throughout the quarter. So as the quarter was ending, things were getting better. And of course, that's better for investors because that means that the momentum is continuing and the second quarter could be even better than the first quarter, or the next quarter could be even better than the previous quarter. So momentum in its grocery sales continued, and Walmart's been demonstrating momentum in grocery sales for over a decade now, with a mid-single digit comparable store increase and ongoing market share gains. More and more folks are looking to Walmart for their grocery shopping needs because it's an attractive option, relatively speaking. The prices they offer, the selection they offer beats rivals in most cases. And as they have demonstrated that to consumers, people have kept going back to Walmart for as much of their grocery needs as they can satisfy. And that's helping its other business because grocery is a repeat business. People keep coming back. Some people every couple of days, some people once a week, some people every 2 weeks. But it's a repeat business and you get customers coming back for more. And that helps your other categories because while they're shopping for groceries, they might pick up a pair of socks or they might buy a 12 pack of t-shirts, something that you generate a better margin on instead of grocery because grocery is notoriously a low margin business. Its general merchandise sales declined slightly with softness in electronics, home products, and sporting goods. And electronics especially is a category that's been struggling in since the economic reopening, I would say, because during the COVID-19 lockdowns, so many people and so much money was spent on electronics, on things like laptops, computers, tablets, smartphones, etc. And these are relatively long-lasting goods. They can last you a few years. And so much was purchased during the pandemic, during the lockdown stages of the pandemic, that this category has experienced a sort of lull for the past couple of years because so many people already bought whatever they were going to need that there's been a lack of sales in these categories. But investors are hopeful that there's going to be a strong replacement cycle, meaning that when these products get dated and they need to be replaced, which is going to be any time now, there's going to be that replacement of those electronics that were purchased in 2020 and 2021, that it'll fuel a strong rebound in sales as a result of those replacements that will be purchased during that cycle. So right now, there's a decline in that category, there's a lull in that category, but look for this category to recover when that replacement cycle really gains momentum, which hasn't started yet. So Walmart is focused on value and managing their relative price position. So they're not just looking at price on absolute terms, they're looking at price compared to Target, at price compared to Costco, at price compared to Amazon, and looking at how much they're selling their products on average compared to Amazon and Costco and Target in order to put themselves in the shoes of the consumer who has these choices and decides where to shop. And so that's where Walmart's focused on is their relative price position. And if you didn't already know, their business model is to be the low cost provider. So they want to be the lowest cost option on consumer facing products. When they're looking at Walmart compared to Costco and Amazon and Target, Walmart wants, on average, the consumer to see lower prices and feel confident that they are getting the lowest price at Walmart. That's Walmart's goal. That's Walmart's business model, one that I will say they've been excellent at executing on for the previous few decades. The low cost business model is the hardest business model to execute, but if you can execute that model, it's hard for your competitor to make any headway against you. So Walmart has done that and they've sustained that. And it's partly why you see Walmart stock trading at a premium valuation right now. So Walmart has seen private brand sales outperform grocery. It's up 60 basis points versus last year. And this is usually an indication of a consumer that's feeling pinched because they're trading down from brand name items to store brand items. And that's usually a sign that people are trying to save money. People are feeling like they're not so wealthy. The wealth effect is going negative. And so you start to see trading down. This is an early sign of this, and I wouldn't be surprised if we see more of this given the macroeconomic situation. Hopefully, it's contained and doesn't grow too large because this is a sign that people are feeling not so wealthy, and we don't like to see that in any scenario. And so, hopefully, this is just contained here in this category, but that remains to be seen. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.